Good morning, dear students. Today we'll see about the deduction in computing the total income. When we calculate the total income, the total amount what we get is called as GTI, gross total income. In gross total income, we need to reduce certain deductions which are being said under section 80C to 80U of Indian Income Tax Act of 1961. So, while reducing these deductions, we need to make sure that which type of expenditure will fall under which particular deductions, and then what is the total qualifying amount of deduction under the various sections said by income tax. The first important deduction, we call it as deduction in respect of certain payments, that is deduction in respect of payment of LIC premium, or in other words we can call it as savings and investments, ATC. ATC is related with your savings and investments what you are doing in the different areas or portfolios. In that you are allowed for a deduction of total amount of 1,50,000 rupees. So that particular deductions we can call, the first is payment of life insurance premium. If anybody is making any life insurance premium on own life, on children's life, on the life of the spouse, it is allowed as deduction under section ETC. But if anybody has done a life insurance on parents' life, and this particular thing is not applicable. Similarly, LIC is applicable, the ETC is applicable for the Hindu undivided family as well as for individuals. Now, the deduction what you claim is allowed if policy is issued before 31st 3 2012, 20% of sum assured, right? Or actual premium paid, whichever is less. If the policy what you got, or if it is issued by the insurance company before 31st of March 2012, so here 20% of sum assured or actual premium paid, whichever is less, in that particular category the amount will be allowed as deduction. But if the policy is issued after 1/4/2012, after 1st of April 2012, if the policy has been issued by the insurance company, in that case 10% of the total assured amount and 15% with disability. If anybody is suffering from any disability, in that case 15% with disability, whichever is less allowed as the deductions, right? Now here, this is the first important thing as deduction, that is LIC. Second term is tuition fees. When tuition fees is paid for the education of the children, right, where the children is learning in some full-time course or a full-time college or education, in that case the actual tuition paid fees paid by the SSC, that can be allowed as a deduction, right? It is allowed as deduction. But if it is not tuition fees, if it is some other kind of fees they have taken, maybe donation is there, building fund is there, those things are not allowed as deduction. Only in the fees receipt, whatever tuition fee is mentioned, that amount of tuition fees will be allowed as a deduction in the ATC, right? And the maximum for 2 children it can be given, right? The deduction shall be allowed to maximum of 2 children. If any SSC is having more than 2 number of children, if they are doing any studies, so up to 2 children it is allowed as the deductions, but more than 2 children the deduction can't be claimed. Similarly, admission fees shall be eligible for deduction, but donation, right, admission fees they have taken instead of tuition fees, even that can be allowed as deduction. But donations, building fund or uniform fees, those all things are not allowed as deductions. Development fees shall not be eligible even, right? Similarly, private tuition fees shall not be eligible. If any student is taking any private tuition fees, that is not eligible for the deduction under section ETC. Similarly, the third is payment of annuity plan of LIC. If anybody has invested in annuity plan of LIC like Jeevan Dhara, Jeevan Akshay, these are premium plans of LIC, right? Here maybe you are paying at lump sum amount, right? Instead of paying in a premium ways, you may be paying some lump sum amount. In that case also, it will also qualify for a deduction under section ATC. Then next is payment with the government from salary, right? If any government is there, if they are paying anything from out of the salary, it is also allowed as deduction. Similarly, contribution to statutory provident fund or public provident fund, recognized provident fund, superannuation fund, or the contribution to unit linked to LIC premium, then contribution to unit specified by the mutual funds or unit trust of India, then LIC or mutual fund contribution, then similarly pension fund or government securities, national saving certificates, national deposit schemes, then approved shares or debentures, approved units of mutual funds, bond of national bank or NABARD, then a repayment of loan amount taken for construction or purchase of residential house, then cumulative time deposits in 10 years or 15 years, then term deposit, fixed deposit with a scheduled bank, then similarly deposit with senior citizen savings scheme 2004. So these are the things allowed as deduction under section 80C. Then similarly some more are there. Those are deposit amount, post office 5 years time deposit, accrued interest on NSC, if you get any accrued interest on your national savings certificate, subscription in Sukanya Samruddhi account scheme in name of the girl child, right? Many SSCs they are making for their girl child, especially up to 2 girl child, government is providing you a scheme called as Sukanya Samruddhi scheme account. If anybody is investing in that particular account, even they are allowed as deduction under section 80C. So what is the maximum qualifying amount for deduction? So it is actual amount invested, whatever amount you are investing, or maximum limit is up to 1,50,000. In actual amount or maximum 1,50,000, whichever is less will qualify for deduction under section 80C. Second is deduction in respect of contribution to certain pension fund. There are certain pension funds which income tax has said, if anybody is contributing towards that pension fund, even that is allowed as deduction under section 80CCC. Now, what are those? This is only applicable for individual. Pension fund is not applicable for HUF or any other SSCs. So the condition to be satisfied for the deduction in respect of contribution to certain pension fund is assessee who has paid or deposited any amount under an LIC annuity pension plan, whether the LIC Life Insurance Corporation of India or any other insurer. The premium paid must be paid out of the taxable income, right? So to call this particular deduction or to get this particular deduction under section 80CCC, he should have invested in any of the annuity pension plan, whether it is of LIC or any other insurer, right? So the rule for deduction is actual amount of premium paid or deposited, whatever premium he is paying or he is depositing, or maximum limit is rupees 1,50,000. Whichever is less is allowed as deduction. Third is deduction in respect of contribution to pension scheme, right? So if anybody has invested in pension scheme, apart from pension fund, there are pension schemes also available. So it is said in section 80CCD. So an employee of central government or any other employee or any other SSC being an individual has paid or deposited any amount in his account under notified pension scheme, we call as NPS, notified pension scheme, he is allowed a deduction of the amount paid towards such schemes is computing total income as given under, right? He is allowed as a deduction if he has invested in notified pension schemes. So what are the deductions? So that is the aggregate of the following: employees contribution to notified pension schemes to the maximum of 10% of the employee's salary, right? Then employees contribution to NPS to the 10% of salary or rupees 50,000. So whichever is less is allowed as deduction, right? If first of all 10% of the salary they will take, and then 10% of the salary or 50,000, in this whichever is less is allowed as deduction. Now to call as salary, what are the things included to calculate salary? Salary means here basic, whatever basic is getting that is included, plus DA if it is forming the part of retirement benefit, or if it is included in retirement benefit, that DA is also considered. In individual other than an employee can deposit up to 20%, right? GTI in the pension scheme of the central government. Third is total amount of deduction under section 80 triple CE. So here to calculate this, it is an aggregate amount of deduction. Whatever deduction we studied like 80C, 80 triple C, 80 double CD. So here employees contribution to NPS cannot exceed 1,50,000. We cannot take it separate. So while calculating this particular thing, 80 double CE has been amended so as to exclude employees' contribution towards NPS trust for the monetary limit of 1,50,000. So consequently, employees' contribution towards NPS trust shall be allowed as deduction to the extent of 10% of the salary as computed under section 80 double CD. Such deduction shall not be restricted by the section 80 double CE. Right? It is not restricted. So while claiming deduction under section 80 CE, rupees 1,50,000 does not include employees' contribution NPS. Addition deduction rupees 50,000 is allowed. Right? Like earlier days, 80C, 80 triple C, 80 double D, 80 double CE. These all things were included at the total of 1,50,000 was being provided as a deduction. But 80 triple C double CE will not include 50,000 of that deduction. It is separately provided for NPS scheme. Now next deduction is